absolutely shocking data today coming in saying that retail have just piled into stocks, tech stocks, at the highest rate since 2008. That is, to me, a very sad fact because retail, my friends, somehow always figures out a way to become the exit liquidity. Now, looking at the global macro, to me, I don't care. I don't care what anybody says. I don't care that this rally has lasted for weeks. I'm convinced that we still need a cooling. Look at inflation. Look at the labor market. The things that the Fed needs to control, the actual data that they're using to inform their decisions, they're not going to pivot. And this rally, the longer it lasts and the more people pile into an overheated economy with just unbelievable strength in the stock market over the last few weeks, this is giving the Fed everything they need to go hammer down in controlling inflation. Now, what we want to see, if we want to see a Fed pivot and we want to see the Arthur Hayes yield curve control, path to $1 million Bitcoin, weakening of the dollar, printer is coming, what we want to see is we want to see weakness. We want to see fear from the Fed that they're going to break something. But right now, I'm blocking out all of this FOMO because the reality is that nothing makes sense. When we had the COVID crash, and then we got the up-only chart, which didn't make sense to so many people. When you look back, it makes perfect sense because they unloaded the spigot of free money and they doused the economy in it like we've never seen before. This was literally the most absurd injection of liquidity into the markets we've ever seen. Used cars were getting driven off the lot new cars were getting driven off the lot and going up $10,000 in value. That doesn't make any sense. This was when we entered crazy land, where depreciating assets became appreciating assets, and literally everything that could have possibly gone up versus the dollar did so. Now, we're in the cool off from that. This has been the wildest, wet, and crazy weekend we've ever had in Cabo San Lucas, and everybody needs a little bit of a hangover. And if you think the Fed is just going to continue dousing the economy in money and risking inflation becoming entrenched, I think you all are very, very wrong. Because the Fed cares about controlling inflation more than anything else. Politically, if inflation soars too much, the amount of misery across the world will become politically untenable. Now, the small bit of hopium here, is that we get a slightly lower CPI print tomorrow, I believe is the day that this is coming out, than we had over the last few months. Now, the reality is that year-over-year inflation will become naturally high. It's going to stay high for a while. But we've never, ever in the history of inflation had inflation go down without the federal funds rate becoming higher than inflation, meaning inflation was at 9%. We've never seen inflation go from a figure like 9% down without the federal funds rate or literally what the Fed is doing to interest rates go above that inflation number. So maybe this time is different. I hear a lot of this time is difference. We were hoping this time was different with this super cycle, but that didn't turn out. And so until we see some evidence that this time is different, that to me, there's no reward here. There's no cookie at the end of the rainbow. And the reality is that the longer this goes on, the longer I feel the winter in crypto and risk assets will be. It makes this whole timeline far longer than we were hoping. What we wanted to see, as much as this would have been painful, was a sharp crash, something in the economy breaking, and the Fed needing to step in and turn on the printer again. $1 million Bitcoin incoming. Now, what we're seeing is that the Fed is seeing that no matter how much they're hitting the economy with higher interest rates and quantitative tightening, well, the markets are resilient. The labor market's going crazy. They need to crush demand, and to do that, they're going to be draining liquidity from the markets. So, in my opinion, the thing that has caused this incredible bubbly bull run over the last few years is going not just receding and softening, it's going reverse. So, any of these rallies do feel like retail traps. Obviously, the institutional money is not your friend. The whales have never been your friend. And that's why they're pumping, in my opinion, pumping the bags here to try to get one last exit pump. Maybe not one, maybe there's a few coming. But my gut my heart feels that there's no reason to buy right now. There's just no reason to buy. The upside is too limited. The opportunity for this truly being a bottom doesn't make sense to me. And I believe that the biggest rewards will come from those who zoom out, understand how crazy 2020 and 2021 were, take a beat, and understand that what happens after these historical bubble blow-off tops in the stock market, specifically in tech stocks and high growth stocks, well, usually there's a period of icy cool-off that takes a while to form a bottom, takes a while to reverse, and eventually, once things have truly cooled off, now the Fed can step in. Now we can reverse and loosen economic conditions and we can begin a long cycle of growth. But what I was hoping for around this August-September pivot, now with what we're seeing now, this is craziness. So we're not getting the data we need. We're not seeing the misery we need for the Fed to truly step in and do what we think they're gonna do. I'm a huge Arthur Hayes fan. I'm gonna be breaking down his Ethereum article over the next few days. I do believe he's right on a lot of things. I think the timing of celebrating a Fed pivot right now is just not the right timing. So while we agree on an ultimate destination, I do not agree on the timing of reaching that destination. So let me just recap right here. CPI coming in lower might lead to an extended rally. It'll carry potentially this rally into the fall. In my opinion, the longer this goes on, the longer it takes us to find a bottom. And the next rug, if we do get rugged after going much higher, it'll hurt people even worse because the FOMO is going to start kicking in. No matter how many videos Elio Trades makes, that doesn't stop people from FOMOing in. Big green numbers bring money in. And to me, it feels like a trap. It feels like this retail buying in at the highest rate since 2008. By the way, go look at when the stock market actually bottomed and the NASDAQ bottomed. It wasn't until like a year later or more. And so what are we going to see here? I hope it's not what it looks like, but it certainly feels like there's another big leg down in equities. And I wouldn't have even thought it would be as bad if not for this FOMO. This FOMO to me is a big warning sign. It's a big signal. And you just need the scars to prove these things. If you've been through these bear markets and these down markets before, you start to get the feelings of when you start to see fake pumps, right? And this just doesn't feel authentic to me. It feels the opposite of authentic. And so beware, retail piling in, not a good sign. Usually retail don't know. Usually the big boys, the institutional investors do know. So beware when the market is all retail, those are the flimsiest investors in the market, right? And so in my opinion, tons and tons of reasons to be cautious right now, tons and tons of reasons to check your bias, to control your emotions. The longer this winter is, the deeper and steeper the discounts on prices of good coins and even good tech stocks might be. Hey, look, we might even be buying some tech here over the next few years in the stock market, but not until I see true capitulation, not until I see a bottom, not until I see something kind of break in the economy. Something's gonna break, something's gotta give, right? Remember what caused the 2020 pump. Remember why they were injecting money into the economy. Jobs were disappearing, businesses are closing. Those businesses and jobs haven't all come back. We've just seen wage price inflation. We've seen a tight labor market. We've seen a lot of things that don't reveal a completely happy and cheery sunshine and rainbows economy. We just see a ton of speculation and we see a ton of inflation. And those things are not healthy for the economy. We're seeing one of our biggest trade partners, China, going through one of its biggest challenges ever in history, a challenge that we don't know if they'll make it out of, but just know the growing China economy was super, super beneficial to our super globalized economy. I'm not gonna go into all this right now. What I see, warning signs. What I hope doesn't happen is people FOMO in. What I hope people realize is that for every dollar you risk manage today, you'll have that dollar to potentially invest at real rock bottom prices. And we're starting to get to when I tell people I work in crypto, they say, oh, I'm so sorry. That's exactly where you want it to be. That's where it was in 2018. That's specifically where it was in 2019 when the best buys ever were happening. And so I'm just waiting for us to get back there. We're still not there. Being through the bear market before, you need to respect the x-axis. You need to respect the time that it takes, the amount of consumer sentiment that needs to reset, the amount of, I'm so bullish on Ethereum and the merge. And everyone keeps asking me if I've started buying aggressively yet. And I'm gonna answer that question on an episode. Hopefully it comes out tomorrow. It's a big episode on the merge, on Ethereum, on predicted prices. I'm gonna be giving you my whole 2 Satoshis. And I hope it helps. And again, I could be wrong. I could be dead wrong, right? I get a lot of comments these days of people being like, yeah, it's a bull market, you're wrong. Cool, go buy coins if you wanna buy coins. But I'm gonna stick to my guns. I believe I have the right opinion. I believe I have the right strategy. And I believe that by sharing my strategy, hopefully, by the way, a strategy of caution means you saved $1. So if we're in a new bull market, everyone can grow together. But to me, it's way too soon. Bitcoin's at 23K. Come on, we're down like 70% or something. I don't know. I'm not sure what exact percent. We are not even up to half of the bull market all-time high. So it's way, way, way too soon to be calling a true return to bullish posturing. It is crazy too soon. We had the craziest bull market in the tech stocks. We had the craziest bull market in any asset everywhere at the everything bubble. And people want us to go back to a bull market just like that. People think I'm being weak for calling a bear sentiment. It's weak to be scared of the bear. I'm not scared of the bear. I want the bear blood, and I'm gonna drink it, and I'm gonna buy it, and I'm gonna paint my face in it, but not until we have had the true reset, the true Fed pivot, the true cycle is played out. I hope this helps you. If you guys wanna find me on Twitter, it's @LEOTrades. If you guys want the best exchange in the business, you can get a wild discount on my link signing up for FTX. It's definitely my exchange of choice. It's the best in the business for sure. I'm gonna be putting on these amazingly stylish, futuristic, one-of-a-kind Pit Viper shades, blocking out all negative energy, because I believe that by focusing on the long term, 2030, by understanding how much time is needed to reset the cycle, people can truly benefit from this cycle. That's where you get the full 100x, not just on one coin, not just on one bet, but on the whole portfolio. And in doing this, I hope we can all grow together, but it requires right now patience, and I hope you guys can all find that within yourselves. Let me know if you guys like these videos in the comment section below. Smash that like button, destroy it, and I'll see you very soon on the next episode.